I mentioned a while back, guys, at the start of these tariffs when they were first announced that Toyota would be probably the worst hit by the tariffs. And it turns out that could potentially be accurate. Toyota have revealed that they will be getting a $1.2 billion tariff hit in April and May, just for 2 months, $1.2 billion. If you extrapolate that, just say a 12-month period, yeah, I mean, you're looking at what, 7 or 8 billion US dollars. That means a 21% profit drop. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. It's great to have you with us. Toyota expects US tariffs to cost them $1.2 billion in April and May, driving a 21% profit drop in operating profit this fiscal year, even as the company rushes to deflect the blow with higher sales, cost control, and new revenue streams. They now sell fentanyl and crack cocaine. No, I'm just kidding. But you never know. Just joking. Don't sue me. Despite uncertainty in the global trade outlook, Toyota still issued a financial guidance on the 8th of May, forecasting its vehicle sales would climb by 4.7% to 9.8 million, led by delivery increases in major markets, North America, Europe, and Japan, but not China. That goal represents a new Toyota record for consolidated fiscal year vehicle sales, underscoring the company's, what the company claims is its smart decision to not focus on selling electric cars, which is so far working out all right in the US, Japan, and Europe, but not so much in China. Now, obviously, the other issue is, of course, that Toyota has about 9 years to prepare itself for the European car market being electric only. In 2035, it will no longer be legal to sell, 98% of the cars Toyota sells in Europe. Considering China is going fully electric, or at least fully plug-in hybrid and electric, it's going to be an interesting challenge for Toyota to maintain their sales momentum. So they need as much cash as they can get at this point in time. This is opening the possibility that Toyota might actually increase prices in the United States. Overall dealer supply is at 10 days, and that means that really having enough product could be an issue. This is what Toyota said. In the past, we have raised prices when demand was high. So we'll look at the situation and take the appropriate action and at the appropriate timing. In the short term, Toyota will sit tight, they say, and weather the rough ride. In the longer term, it will adapt accordingly, possibly by increasing local production capacity. But I mean, even if Toyota does increase local production capacity, it won't be able to increase it anywhere near enough to offset the fact that it makes, well, last year, more than 1 million cars that Toyota sold in the United States were made outside of America. Most of them, in fact, in Japan. Deliveries in North America will be buoyed by the fulfillment, though, of back orders and the resumption of full production at Toyota's plant in Indiana, which suspended output last year amid very expensive, costly recalls to address major quality issues with some of its popular vehicles. The Indiana plant makes the Toyota Highlander and the Grand Highlander and the Lexus TX. So what does this mean for Toyota? Well, overall profit is declining 21% to $25 billion in the current fiscal year ending March 31, 2026. Operating profit margin is expected to decline to 7% from 10% in the outgoing fiscal year just ended March 31. So it's true that Toyota is selling more cars in some of its markets, but its profits are declining, as is the case with pretty much all Western automakers. So Toyota is saying that this outlook accounts for tariffs of some $1.2 billion in April and May, the first 2 months of the new fiscal year. But remember, those tariffs weren't in place for all of those 2 months. So tariffs could actually be worse than that for Toyota, and it's going to have a pretty significant impact on them. Even though their profits look quite healthy at this point in time, and you could say that they are. Remember, Toyota does have more than $200 billion of debt, and almost all of that debt, 90%, is not good debt. It's bad debt. It's not financial debt. So Toyota need to make a lot of money to offset the interest payments on that debt. Now, America some analysts have been quite critical on Toyota. They're saying that Toyota is sticking their heads in the sand. Here's what Christopher Richter said. Are they just sticking their heads in the sand? They are only assuming tariffs for April and May. I don't think this is a genuinely conservative forecast. It doesn't really add up unless Trump suddenly buckles. Toyota are assuming that tariffs at the end of May are finished. No more tariffs, bye-bye tariffs. And so they're only going to lose 1.2 billion. And basically, Christopher Richter, who is a senior analyst at CLSA, Asia Pacific Markets, says that this is completely lunacy. It's not logical at all. Richter questioned the goal of higher US sales if prices are poised to rise. And he's right. I mean, he said this, prices are going to go higher and fewer cars are going to be sold. Toyota's saying more cars are going to be sold. It doesn't make sense. It doesn't add up. Others said the math is doable. If Toyota ramps up measures to blunt ongoing tariffs on the 500,000 vehicles it ships to the US, it's actually 1 million that it ships from outside of America, then I just don't understand how this is possibly logical. They can offset tariffs of 25%. 25% tariff, just completely offset it. It doesn't add up. It's obviously not, it's not logical. It doesn't add up at all. The only way to actually do this, though, said Koji Endo, a senior analyst in Japan at SBI Securities Company. He said this, right? The only way they can offset it is by raising prices. However, Toyota is facing some serious challenges beyond tariffs. Even though US tariffs create a unique challenge for all international automakers, Toyota spotlighted other big challenges in the current fiscal year. Rising material costs and unfavorable foreign exchange rates will each take bigger bites out of profits for the time being. Now, Toyota has benefited, well, over the last year or two, from exchange rate fluctuations. They've benefited significantly from that. And now it's obviously, it wasn't going to stay that way forever. It never can. Fluctuating currencies will cost around $5 billion this year. Higher material prices will cost $2.3 billion. So it's around $7.3 billion removed from Toyota's full year profit. That's from Toyota themselves, by the way. Net income is forecast to fall 35% to $20.7 billion for the entire year, while revenue is pegged to inch ahead 1% to $323.8 billion. Toyota's earnings outlook came as the company announced a 10% drop in operating profit for the fiscal year ended March 31. So that's not for this tariff situation, right? Basically, we already saw a 10% drop in profit over the last 12 months. We're almost certain to see at least a 20% drop in profit over the next 12 months. Let's just be realistic here. These results capped CEO Koji Sato's second year as the CEO of Toyota. But remember, though, that he's sort of running the show, but sort of not, because the president of Toyota is still the grandson of the original founder, Akio Toyoda. But Toyota's momentum is cooling. Operating profit dropped 28% in the 3 months to December 31. Operating profit has fallen by nearly 30% over the past 3 months. That doesn't even include any of the tariffs, right? It doesn't include the last couple of months. So operating profit could have fallen potentially 50 to 60% over the last couple of months. That was before Trump took office, as I said, and a wave of changes were felt across the industry for numerous car manufacturers. And what this means is in the crucial United States market, its most important cash cow, Toyota makes more money from America than any other place in the world. Sales have held up so far, but that could be about to change. Basically, Toyota's sales have actually grown this year by 3% in the US. As you can see, though, profits have not. For Toyota, like many other automakers, they've tried to cash in on a rush of customers looking to buy vehicles before the Trump tariffs truly came into effect. The question is, how much of this sales surge was pulled forward from future demand, and how far sales and profits might drop later on? I don't know what you guys think. I'm curious to know. Let us know in the comments. But here's what I think. I think over the next few years, Toyota's sales, they're at a peak point now. I think we're going to see, as I've mentioned before, they are losing sales in China. And that is the largest car market in the world by a mile. It's twice the size of the US car market. That's a massive blow to them. But in addition to that, this issue in the United States is a massive one. You can't just start building 1 million cars in America within the space of 6 months. It doesn't work that way. This will be a massive effect. And then you've got another market. You've got Europe as well. And obviously Europe, 9 years from now, is going to be electric only. How will Toyota respond to that? I don't think anyone goes out and says, I want to buy a Toyota electric car. I don't think anyone says, Toyota's electric cars are known for how good they are. Let's buy an EV that's going to be a Toyota. And I can't see that changing in 9 years from now, but I could be wrong. So here's the key issue. Toyota is facing some massive challenges in multiple markets, in every major market in the world. The one market I think it will have no issues with is probably Japan. But then, only 4 million cars are sold every year out of 82 million car sales worldwide in Japan. So that market is nowhere near as big as the other markets, Europe, the United States, and China.